Good afternoon. This is Keith Brown in Moultrie, Georgia, with some cash cotton commentary. It's about 3:45 on Thursday. Of course, we're coming back from the 4th of July holiday, in which we had a suspended trade for 2 nights and a day. And, of course, not to be disappointed, the temperatures intensified and the grain markets really rocked and rolled to the upside today. Cotton quite disappointing. So let's get to that. Cotton today down 200 points, 70.58. We think this is part just of a technical tug of war that the market is in. Of course, the market may be going ahead and thinking about the next supply-demand number coming out, which is next week. Those haven't been very friendly, so maybe the market's kind of dialing that in. Also, tomorrow we get exports. And, of course, the last export number was pretty bearish. We had a 600,000 bale close, rather cancellation by China. So the market's just a little timid here to get up and going, although I think there's a chance here that market, well, it's building a nice technical pattern. We've been detailing that on a cotton letter, and the market could get a little rise either way in here. So we'll just have to let that thing mature and see what it does. Over in the grains, we're sharply higher today. September corn went out around 7.08, up about 34 cents as the heat and, of course, stress intensified. These weather markets are just absolutely, totally unpredictable. We're just recommending to guys that cash price some stuff in increments and on the strength of the market. So, as an example, maybe be 10% price September corn at $7 and put another 10% up at $7.25 and scale it up like that to see what the market does. We're also equally importantly keying on next September new crops grain. September corn, of course, 6.35. July wheat next year, 8.35. November beans next year, trading around $13. All those very enticing levels. I think we've got some more upside to go in the nearby, though, which could tug up the those distant months. We get exports tomorrow, like I say, it's been delayed. I don't think we're going to see very good corn exports. There's also been a fear that, with the weekend coming up, there's a fear that they could alter some of the weather patterns, namely that the jet stream could get tugged down a little bit lower, and that would certainly encourage at least cooler temperatures to show up. So, I think that would certainly allow the corn market to break. We think corn does go higher, but we really need a correction here. I think that'd be much healthier for the market overall. At any rate, sort of an abbreviated talk today because of, we're just coming back from the holiday. Of course, we do know that China and Europe both lowered interest rates today, which sharply routed the U.S. dollar. That's a big negative for the cotton and grains, but also a negative for the fuels today. They traded off today, crude oil down about $1. So it's the middle of the summer, typically a time for peaking the grains, probably bottoming the fuels, but we'll keep you apprised of that. Any questions or comments, of course, give us a call, 1-800-910-1910. Thanks for listening.